Advance tax is a form of income tax that is payable in case your tax liability exceeds 10,000 rupees for a particular financial year. This tax must be paid by the taxpayers in the same year the income is received. For this purpose, advance tax is also known as pay as you earn scheme. Next question is, who pays advance tax? Salaried individuals do not have to pay advance tax as employers generally deduct the tax at source. Advance tax is therefore levied on individuals who have sources of income other than salary. This includes income that is received through capital gains or shares. They are also required to pay advance tax on interest earned through fixed deposits, rent received from house property, as well as winnings earned through lottery. You may note that self-employed individuals, businessmen, companies and corporates too need to pay advance tax. Due date for advance tax payment. For Q1, on or before 15th June, not less than 15% of such advance tax. For Q2, on or before 15th September, not less than 45% of such advance tax, as reduced by the amount, if any, paid in the earlier installment. For Q3, on or before 15th December, not less than 75% of such advance tax, as reduced by the amount, if any, paid in the earlier installment or installments. And for Q4, on or before 15th March, 100% of such advance tax as reduced by the amount, if any, paid in the earlier installment or installments. Next question is, what is the process of filing advance tax? Certain bank branches are authorized by the Income Tax Department to collect advance tax through tax payment challans. Some banks which collect advance tax include Reserve Bank of India, HDFC Bank, Allahabad Bank, ICICI Bank, State Bank of India, etc. You may also pay advance tax through internet, either through the Income Tax Department or National Securities Depository Limited, which is NSDL. Final question would be advance tax calculation. With the help of an income tax calculator, you may determine the amount of tax to be paid. Alternatively, you may also follow some steps to ascertain the amount of advance tax to be paid. Steps are as follows. Determine your total income earned through various sources other than salary. Deduct all related expenses such as internet cost, phone bill, travel expenses, and rent of workspace, so on and so forth. Sum up other income received through the year. This may include income from fixed deposits, house rent, lottery earnings, besides many others. In case the calculated tax amount is higher than Rs 10,000, you are liable to pay advance tax. It is important to note that failure to pay advance tax by the stipulated deadline attracts penalty. You may therefore do your due diligence and pay your taxes on time. Under the Income Tax Act, different types of interest are levied for various kinds of delays and defaults. Section 234A, 234B and 234C deals with interest levied for delay in filing the return of income, non-payment or short payment of advance tax, and non-payment or short payment of individual installment or installments of advance tax, and section 234F deals with penalty for late filing of income tax return.